Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, January 11th, 2022, and I'm pre-recording this Trading Places Live for Thursday, January 12th. Let's see, currently we've got futures. They were just down a little. Yeah, still slightly down. We got Dow futures down about 15 points, S&P 500 futures down 1 3/4, NASDAQ futures down about 11. We still got a long way to go until the morning. And of course, tomorrow morning, we've got the December CPI report due out. So everything could change between now and then. But right now we are showing futures relatively flat, down just slightly as we head overnight. Let me walk you through the agenda for today. So we are going to go, we're going to start off with the daily market recap. So we'll take a look at Wednesday's action, then jump into talking technically, take a quick look at inflation. Figure it's a good day to kind of look at inflation, especially with the CPI data out. And by the time you get this recording, it will already be out. Then we'll look at the EB.com hot stocks. These are stocks on our various chart lists that had a really good day on Wednesday. We'll pull the charts up and take a look at those. Earnings spotlight, and then we will wrap up with the three you must see. Three companies hoping to hold on to key price support. So I'll go over those at the end of the show. Before we get into any of that, though, let me take you over to earningsbeats.com. For those of you who are new, if you go to earningsbeats.com, scroll down, we do have a free newsletter. This is a newsletter that's published 3 times a week, Mondays, Wednesdays, and Fridays. Simply type in your name, email address in the areas provided, and we'll make sure we get you set up. The EB Digest is a pretty quick read. Again, out 3 times a week, Mondays, Wednesdays, and Fridays. Normally just 2 paragraphs and a chart. I try to focus on the things that are important to us. So we take quite a look at earnings, relative strength, price volume, channels, trend lines, moving averages, candlesticks, all of those types of things. But we do try to make it very educational and maybe on occasion there might be a trading candidate if you're so inclined to take on that risk. Anyway, make sure you sign up, though. If you do want to come to any of our free events, we send out room instructions to the EB Digest newsletter. So anyone who is a subscriber will be invited to our free events when we host those. Let me go ahead and move on to the daily market recap. So looking at the action from Wednesday, it was a really good day on the market. The Dow Jones Industrial Average up 269 points, S&P 500 up 50, NASDAQ up 189, mid caps up 30, and small caps up 13. On a percentage basis, you can see a really strong day for the NASDAQ. Now, looking at the sectors, real estate up 3.6%. This has been a group that had been lagging quite a bit, going back really over the past several months. But big day on Wednesday, and we're not far from breaking out to a multi-month high. So really good day for real estate. Discretionary continuing its move to the upside, up 2.7% on Wednesday. So really good day there. Technology up 1.7%, climbing back above both its 20-day and now its 50-day moving average. So good action there. And by the way, the XLY went through its 50-day moving average. So all 3 of these, which had been lagging sectors, all now moving through their 50-day moving average. I think that's a good sign. Materials also a strong day, up almost 1.6%. And then staples, you can see, was the laggard. It did finish higher by about 5/100ths of 1%, but it was the worst performing sector. All right, moving on to the 10-year Treasury yield. Now, this is obviously something that'll probably change quite a bit on Thursday, depending on that December core CPI. The expectation is for 0.3% rise. November rose 0.2%. So we are looking for things to pick up just a little bit in terms of the core CPI, but that December core CPI expectation is much lower than the previous December from back in 2021. So that could actually bring the annual rate down. I'll talk about that in just a few minutes. On Thursday, we'll also be getting the initial jobless claims. So 204,000 last week, 215,000 expected this week. On Friday, we will get the January consumer sentiment. December was 59.7, and we will be expecting 60.0 on Friday. So we'll see whether or not that holds true. Of course, consumer sentiment was tanking a year ago, and that was one of our warning signs about the market. We're starting to see that stabilize and turn back to the upside. So likewise, I think this is a pretty good sign for the market. But again, let's see how it comes in on Friday. All right. Moving on to talking technically, the S&P 500. Really solid day. I mean, we've moved up 3 days ago. This would have been last Friday. We moved up through the 20-day moving average on the S&P. And we did reverse on Monday. I thought the way we closed on Monday and the failure to get through the 50-day moving average, to get through 3,900, short term, I thought that was going to be bearish. We did go down initially on Tuesday, went right down to that 20-day moving average, but we bounced off of it. And last 2 days, we've seen a lot of buying. You can see finishing on the highs both days. So the good news for the bulls is that we do have momentum going into this CPI report on Thursday morning. All right, let's go ahead and move on to inflation. So I want to talk a little bit about inflation. This goes back a few years, 4 years, I think, to be exact. And up here at the top, these are the actual monthly core CPI readings. So tomorrow we'll come out with the reading. It'll be something over 300. Last month was 300.07. The percentage difference between the two, between last month and this month, will give us our percentage change. And that's what everyone's focusing on. So if we look at the estimate, again, the December core CPI expected to come in at 0.3%, so right about here. Now, if you know how this annual rate is calculated, basically all you do is you add in the new month and you subtract the month, or the month from a year ago. So we'll be adding in December 2022 and we'll be subtracting out December 2021. Well, here was December 2021 and it was up just around 0.55. If inflation comes in as expected at 0.3, that 0.3 reading will replace the 0.55 from last year, resulting in a quarter of a basis point drop in the annual core CPI. So we already dipped below 6 to 5.96 last month. If we hit the number that's expected tomorrow, we'll drop another 0.25 to 5.71, which will be the lowest reading in a year. Let me say that again. If we just hit expectations, we will see the annual rate of inflation drop to its lowest level in over a year. I mean, it looks to me like inflation's heading in the right direction. Now, you know, when the report actually comes out, and again, by the time you're listening to this, we will have already gotten it out. But if it comes in hotter than expected, especially if it's a lot hotter than expected, then we will see this support from the summertime hold in terms of the annual core rate of inflation. But if we see 0.3 as expected, or maybe even 0.4, or maybe 0.2, maybe we'll see another low reading. If we do, that's going to bring the annual core rate down to a 1-year low. It's going to be hard for the Fed to stick to its tough stance of fighting inflation when inflation moves to a 1-year low. So I don't know. We'll see how it plays out, but I do think everyone should be really paying close attention to that December core CPI number that's due out tomorrow morning. All right, let's talk about the EB.com hot stocks. All right, so first things first. On the strong earnings chart list, the best performer on Wednesday was Exact Sciences, EXAS. And if you look, this is a stock that's really gaining a lot of strength. Big move up a few weeks ago with a gap up. We went down, almost got back down to the gap support area. And the last 3 days, big breakout. Look at the volume picking up, closing on the highs or near the highs every day. And that is resulting in a very nice AD line, which is now trekking higher. If you look at the relative strength, Exact Sciences relative to the biotech group, nice breakout there. Been trending higher. We're now at about, I don't know, maybe a 8-month relative high. So very, very strong action there. And of course, biotechs down here have been strong. So biotechs bottomed all the way back in January, February last year, and have been, for the most part, trending higher relative to the S&P 500. So we got a strong stock in a strong area. Great volume trends, AD line finally moving higher, and great price action breaking out. Now, I don't know that I'd be jumping in to chase EXAS, but I'd have it on a watch list. And I do think a pullback back into the mid-50s, mid to upper 50s, I think would be very interesting on the stock. All right, the next stock, this is on the strong future earnings chart list that we do. And the best performer there today was RVMD, another biotech stock. And kind of similar to Exact Sciences was pulling back after that gap up. Let me go back to that chart again. There's your gap, there's your pullback, and then it breaks out. If you look, RVMD, very similar. Pulling back, didn't have the gap, but we had a nice advance. We pull back, and now it looked like we're breaking out very close to a 52-week high. Volume picked up, looking at relative strength near a 52-week high. And again, part of a strong group. So RVMD, I think, looks pretty good. Moving on to the strong AD chart list. So this is a chart list that's looking for companies that have a very strong AD line. And the one that was among the leaders today was Atlassian Corp. Team. Look at the AD line. This one's interesting because price action, we've got a triple bottom. Let me annotate this for you. So right there, you can see 3 bottoms. 1, 2, and just last Friday, a third test of that level. And looks like it's probably down around maybe 115 or so. but the last 3 days, very, very strong. And like I said, AD line moving to new highs. Still, team is still struggling a little bit relative to software. Software is trying to pick up off this double bottom in terms of relative strength. We have a relative double bottom, but software is starting to pick up and team picking up relative to software. That's good, but it's just a start. We still have a lot of work to do. Overhead, I could see resistance up at about 155, maybe even gap resistance up if we do get through 155, gap resistance up closer to 175. All right. On our raised guidance chart list. So this is a chart list that tracks companies that have raised guidance over the last 3 months. And one of the stocks leading there yesterday or Wednesday, AXNX, Exonics Modulation Technologies. It's in the medical supplies area. We had a big day, but I don't know that I don't see anything that's really changed on the chart just yet. We did get above the 20, but we've really struggled around the 50, and we've been in this downtrend. Got a little bit of a channel. So let me see if I can draw that channel for you. All right, so what I try to do, when I'm doing a channel, what I try to do is find one channel or one trend line and then drag that down and see if it connects. And you can see it does a pretty good job of connecting right there. So at this point, I would say that we remain in the downtrend. And unless we can get up through about really 68 to about $70, it just seems like, we're just going from the bottom of the channel to the top of the channel. And you can see back to the bottom, back to the top, back to the bottom. So it wouldn't be surprising to move back to the top, but we need to break out of this channel. And so far, we haven't really done it. Also, the AD line's rolling back over. And on a relative basis, the stock is trailing medical supplies pretty badly over the last 3 months. So I've got some issues here, even though it had a really strong day on Wednesday. All right, let's move on to this is what I call the bullish trifecta chart list. And stocks that get onto our bullish trifecta chart list have to be on 3 other chart lists. They have to be on the strong earnings chart list. They have to be on the strong accumulation distribution chart list, SADCL, and they have to be on our raised guidance chart list. They have to be on all 3. There's only about 60 stocks on the bullish trifecta chart list. And the one that did the best on Wednesday was VCYT, another biotech, by the way. So this one, I don't know, on a relative basis, it's been pretty choppy all year. It leads, then it lags. I mean, we can see here, lagging, then leading, then lagging, then leading. Now it's been lagging. Now all of a sudden coming back up again, starting to lead a little bit. So, I mean, good news is it's turning back to the upside. The bad news is we've seen this before. So can we continue? Good news, we've gotten through the 20-day moving average. So you could trade this one and simply watch that 20-day. If it can't hold on, moves back down below the 20-day, you get out. If it does hold, keeps moving up, this is one maybe we get up to this double top around $30, $31. I mean, we're talking about, 20% or more from 25. So overall, I think VCYT looks good, but just looking at the history throughout the year right here with this relative strength, it just seems to go through cycles. So it's one of those where you can ride it while it's working, and when it doesn't work, get out. All right. The last chart list that I wanted to look at is the short squeeze chart list. And this has been a chart list that really hasn't done much for quite a while because we've been in a bear market. So a lot of stocks are being shorted, but especially those that are heavily shorted have just continued going down, down, down. They've been in a spiral all year. Well, when you start to get some strength and you start making some key breakouts above moving averages, sometimes these short squeeze stocks can start to catch fire. And so I'm going to go through a few of them today that had a really strong session. First is Bed Bath & Beyond. Big move up through the 50-day moving average. Probably when this ends, it's not going to end well. But where does it end? You got a lot of shorts now that are starting to maybe get a little squirmish after these last 3 days. I mean, we saw Bed Bath & Beyond down at 127 at the low last Friday. Today it closed at 349. That's up $2.22. It's getting close to a 200% return in 3 days. It was up 69% today. I mean, there's no doubt to some degree we're getting a little bit of a short squeeze here. And tomorrow, if that CPI report is less than expected and a lot of money rotates into aggressive areas, this is one that might get a pop at the open, might get another pop. All right, let's move on to the next one, FFIE. So FFIE, obviously very beaten down. This one's up to almost 25% today. Finished at 47 cents. These are not the kinds of stocks that I generally like to trade, but it's worthwhile noting where that next key area of resistance is. And that was an open of 58 cents. If we get through 58 cents, probably the next stop would be 85, 84, 85. From 47 cents, that could be a big move. But these stocks do not come without a lot of risk. There is a ton of risk in trading these short squeeze candidates. Yes, they can make a big move to the upside, but you really want to pay attention when you get reversing candles. See that test of the 20-day and the close at the low? We never went through that intraday high. Look at this move. Gaps up through the 50. Big reversing candle. Back down again. How about this one? Filled black candle. Off of this uptrend and then right back down. So right now we're looking pretty good. Just be on the lookout for these reversing candles. CVNA. Carvana. Big move, got through the 20. I think we could head into this gap resistance zone. Let's see, top of gap resistance is at 671. The reaction high after the gap down was at 594. So we closed at 550. I mean, the 50-day moving average is at 694. And gap resistance is at 671. Could see another 20% here. But is this a healthy stock? Of course not. It's been trending down forever. Stock was over $40 in September. It's $5.50 now. Don't get carried away. If you are able to get in and earn some money on a short squeeze candidate like this, that's awesome. Just beware reversing candles. All right, last one I had here is FUV. And that is Arcimoto. And it did come up. Did it clear that resistance? 437. Today's close, 443. So it did close above these recent highs. And look at the volume coming in there. Now, remember, this is 800,000 shares of a $4 stock. So we're only talking about 3.2 million of dollar volume. It's a very, very thinly traded stock, which is one of the reasons why we could get a big move to the upside. But the problem is If you get in on the long side and it starts to go against you, it can move down quite a bit on almost no volume. So again, got to be careful. But some of these stocks are starting to move on the short squeeze chart list. And I believe there's about 40 stocks, or maybe just under 40 stocks on that chart list that we give out to our members. We update that chart list usually twice a month. And I think there's about 35 to 40 on the list right now. All right, let's take a look at earnings spotlight. And really, I just wanted to go over one stock here, and that is KBH, which is KB Home. They reported after the bell today on Wednesday. They missed on their earnings and they missed on their revenues. So revenues were expected to come in at $1,994,000,000, and they came in at $1,940,000,000. So they came up about 54 million shy of estimates. And the bottom line was expected to come in at 285, and it was 247. So pretty big miss there. But I looked after hours, stock was only down 2%. Not bad, 35.18. Looking at the chart, I mean, I think the stock's okay down to about 33. Try to hold that 20-day moving average. So it's almost like even bad news is okay news in the home building space right now. This is a group that's been performing much, much better. So here's there's KBH. Look at the home builders, home construction index, moving up, taking out prior highs, closed at 1447, which is the highest level we've seen since all the way back in February of last year. We're at an 11-month high on home construction. You think rates are going to keep going higher? I mean, why would home construction keep going up if that were the case? I think the story that's being told here is that rates are not going to keep going up and that we're going to peak and eventually head back down. Now, KBH has not been one of the best performers within the space, so maybe that helps to explain their miss on top and bottom line. But home construction in general has been doing very well. All right, let's wrap it up with the three you must see. These are three stocks that need to hold support. First is Intuitive Surgical, ISRG. I mean, after moving up on good volume early in November, this area right around 255 to 260 has been really strong. Can ISRG hold this level? So far, so good. Big reversal on Wednesday was good, but we got work to do here. Next up, how about Dollar General? Look at all these bottoms in here, right around 233 to 235. Today's low, 231 and change, but we closed at 236 and change. Held on to that support. AD line here looks really good, by the way. And then the last one, SMCI. It's been a really good stock for a while. Strong performer, one of the few in technology in 2022. But look at the gap support, or the gap right there. That gap support we tested. And there was the prior high, $75. So we've gone down, we've tested that area. This is the time. I mean, this is where we need to see SMCI head higher. All right, that is it for me. I do want to mention we are going to have an EB Tools webinar on Saturday. If you'd like to be a part of it, check out our chart lists and how we use them. Go to earningsbeats.com and sign up for a 30-day free trial. We'd love to have you. Everybody have a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.